For any active investor in the stock market, it is very much important to track the outcome of RBI monetary policy meeting. In the monetary policy meeting, RBI governor usually talks about two things: CRR and repo rate. Let's know what are they. Coming to CRR, in order to safeguard the depositors' money in the banks, RBI takes some percent of the money and keep it with RBI. That is called cash reserve ratio. Earlier it is 4%. Now RBI has cut it to 3%. Earlier 10 lakh crores is sitting in RBI, which is not generating any money for the banks. But now it has cut to 3%, which means 2.5 lakh crores of the money is now going to be floating into the market. So banks will gain interest on the money. So it is positive for banking sector. Coming to repo rate is the interest rate at which banks borrow money from RBI. When RBI cuts the interest rate, banks are going to get the money for low interest rate, so they can pass on the benefit to customers. So what they will do, they will decrease the interest rates in the market by that repo rate percentage. For example, yesterday RBI has cut the repo rate by 50 basis points. 50 basis points means 0.5%. 100 basis points means 1%. So banks will decrease the loan on interest rates to customer by 50 basis points. So how is this going to benefit economy? When people are getting money for low interest rate, they will tend to do more business. They will tend to take more capital and deploy it into the business. So the overall money circulation in the economy will grow, which leads to good inflation. How it is going to benefit the economy? When there is more money in the circulation, purchasing power of people will increase, which leads to good profits for industries or companies. And companies are two types: asset-based companies, asset-light companies. In the asset-based companies, most of their working capital is deployed in buying the assets. So they need more working capital. How are they going to get the working capital? They are going to borrow from banks. So now the interest rate from the banks has decreased, and when people are getting credit for low interest rate, they used to buy real estate. They used to deploy the money into buying real estate assets. So it is a very big positive for real estate sector, and real estate is also an asset based sector in which most of the money is blocked in working capital. So they are going to get this benefit from both ends.